working. That's working. That's working. And that is working. Well, all black arrow then. All right. And there we have it. Okay. Florida Patriot, Riley, Ponyboy, Thomas, Beach Babe. What's going on, Beach Babe? Tan Man Can Do, Hattie. What's going on, Hattie? George Carlino, John, Real, how you doing? Big Mo 70. MCon, Sean, Carlos, Chris, good evening, Alan, Sheila, Alan, Chris, Kevin, what's going on? Kevin, J-Law, Joseph Miller, it's the Miller boy. Rennie, good evening. Mike, Alan, good evening. Shih Tzu, good evening, Shih Tzu. Andrew, what's going on? Misfit 6, Dylan, I had to roll Marvel today. Alrighty, I rolled my Marvel today too. Same page. Tinfoil and Truth, interesting name. Lucas, how you doing? Shoot, Stevens, Chris Zelt, good evening. Myron, what's happening over there, Mr. Myron? Misfit, what's going on? Ray, alrighty. We got enough people here. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Looking for a simple, safe, predictable, consistent. What are we doing? Come on. Move it on over. There we go. Simple, safe, predictable, consistent 1% per week. Now, 1% a week does come to over 50% per year, if that's enticing for you. If you like that idea, why the hell not? I don't do monthlies. Way to go, K-Van. What's going on? Stevens, DB Six-Pack, Joe Necco, Reggie Bo Jackson. Dude, I haven't seen you in a while. How you doing? Countryman, Chief Panther, Bree for you for real. Good evening there, Miss Bree. Bamboozled. Good evening, Stephen. Good evening. All righty. So tonight we're going to go over a few stocks. Now, what am I? We don't need to see this. We don't need to see that. Get that out of there. Get this out of there. There we go. And this is what we want to see. Ta-da! All right. Anyway, what we're going to do, Attila, good evening. No Filter. Timothy, what's going on? Put me down for a 6. Cool beans. Brian, Father, what's going on? D-Roy, Mike, what's going on? Mark. Simply Blessed. Johnny White. Smoker. Bogey, what's going on? Bishop Chavez, or Chavez, I don't know. Big R. All right, anyway. Should I have bought more Etsy today? So, Dylan, we'll take a look at Etsy. Why not? Now, Dylan, Etsy is not a company that I actually invest in. Etsy. Okay. Well, you should have bought it earlier if you were going to. Look what it did today. Shot up nicely. So had you bought it this morning, you would have made a nice little profit today if that's what you're looking for. Kevo wants to take a look at ExxonMobil. Jack Noboy, what's going on? Okay. J. Smith, Ohio. Good evening. Alrighty. I said I should have bought more. Oh, you should have. Well, alrighty. Woulda, coulda, shoulda, dude. Woulda, coulda, shoulda. Don't know what you want to do about that. Brayden, what's going on? Peach VR. Good evening. All right. That being said, what we're doing here is we're going to look at some dividend stocks, specifically dividend stocks that are consistently profitable. Now, I'm looking for something very specific. Now, you might think this is just a regular, ordinary, everyday stock channel. Not really, because I'm very particular of what I do and how I do it. I only invest in companies that are consistently profitable. Well, you know, we haven't checked. We haven't checked today or this week how many new companies have been added to the list. So let's go find that out. Now, I always use the same website all the time. That's called FinViz. FinViz Stock Screener. There we go. And there it is right there. Now, we're going to go take a look. at one particular number. That's this number right here. Do you see it? Let me get my circle thingy. All right, hold on a second. Let's get this out of here. All right. This number right over here. 10,371 different companies. So they added quite a bit since last week. Last week it was 10,354. Well, this week, 10,371. They keep adding stocks every single week. Well, that's the number right there today. So out of all those 10,371 companies, which ones do you like? Now, I'm not asking you which ones are shiny and flashy and going to zoom through the roof. That's not what I'm asking. What I'm asking is, which ones do you know? Do you understand? Are you okay with buying and holding for the rest of your life? Because buying a stock, you have to know why you're buying it in the first place. What is your outcome? Well, why are you here in the first place? Well, more than likely, we're here to make money safely and predictably. If you really teaching, show the class. Arthur, I'm not teaching anybody. I'm live on 9 different platforms. So my audience is out there. I don't have a class. You make it sound like there's people in the audience. No. The people are here on YouTube, people here on TikTok, people here on Twitter, people here on my other YouTube channel, people over there on Zoom, and then we got people down here on, what do you call that? Twitch, LinkedIn, and there was a couple other ones. So no, it's not as if there are people standing right there or sitting right there. No, just chill, okay? My mind is blowing. Niki's field trip. How you doing? Big Daddy, what's going on? Jim, how you doing? So did you ever see OCTO? I have no idea what that is. What's your screen filter on FinViz to find your stocks? Okay, J. Dion, no filters whatsoever. None, zip. See, when you first log on to FinViz, it gives you the total number of stocks that are available. And then once you start setting parameters, index, yield, dividend yield, volume, target price, earnings dates, exchange sector, float, blah, 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 all that information. Once you start putting in that information, this number gets smaller and smaller. Well, I don't really care about the number getting smaller. I just want to know how many new companies did they add this week. Well, last week it was 54. I forget. But anyway, this week it's 10,371. It is what it is. All right. So out of all those 10,000, how many are actually paying a dividend? Okay. How many paying a dividend? 5,885. So that means there's just a little bit less than 6,000 companies paying a dividend. All right, you're going to play that way? Oh, lovely. Now my computer froze up. All right, there we go. All right, here we go. So Etsy. Ready? Here we go, Etsy. Here's the high, here's the low, here's where it was, here's where it is. Down, up, down, up, down, up. Okay, what's going on here? Well, there's a big, huge high right there, big drop. Now she's turning around, going back up again. Well, let's zoom into that a little bit closer. Okay, here's your last 30 days. See, the last 30 days gives you a good idea, or gives me a good idea, of where do I think the stock is going next. Well, because I have no idea what you're doing. What I'm doing is I'm looking for a simple, safe, predictable, consistent 1% per week. To be able to do that, I need to know where is a stock going on a consistent basis. Roadman, whoa, thank you for that. So 30 days ago, we're right here at 61. Now we shoot up to 71. That's a $10 increase. That's over 10%. Now she drops down to here at 50. So she goes from 71 down to 50. That's a big drop. That's a $20 drop. A $20 drop on a $70 stock. That's 22%, I think, somewhere that here. So from here to here, it's about 22%. Okay, so here's your bottom. 1 day the upside, 2 days the upside. Tomorrow, if she's above 58.21, that would be my entry price. Wish my property tax was a stock. Okay, Jesse, thank you for that. Rob, good evening. Helena, how are you? Okay, thoughts on silver. Splurge. Thoughts on silver. Well, I don't really invest in silver because there's no way to get weekly cash flow from silver. Okay, so what I'm doing, I'm retired. So my money has to come from somewhere. So I'm looking to invest my money to give me a weekly cash flow. Well, back in 2008, my 9-year-old daughter says to me, Daddy, what are you doing? Well, can you teach me? So hearing, can you teach me from a 9-year-old? Well, nothing better than graphs in reverse. Hey, mental raccoon glass. How are you tonight? Now, out of curiosity, do you know how to reverse the image on YouTube? Because if you don't have an answer to the problem, if you can't fix the problem, and you know you can't fix the problem, why are you pointing it out? Just kind of curious, because I know it's reversed. I do. You pointing it out doesn't happen. I mean, it doesn't happen to make anything any better. Okay, unless you know how to reverse it, fine, let me know. Other than that, I want to say keep your opinions to yourself, but it seems kind of rude. Kind of does. All right, anyway, let's go. So it looks like a great time to buy Etsy. Here's the bottom. Now she's turning up. If you like that company, and it always comes down to that. Do you like Etsy? All right, fine. Well, what's it at now? At this moment, it's at 58.21. Okay, do you like it at 58.21? And what does that mean? Riverside, copy. I'm a fast trader on crypto. Cool beans. I don't do crypto, but, thank you for sharing. Sharewater. Are you the guy Christian Bale played in The Big Short? Yep. How'd you guess? Okay. I like Pulse Chain, Richard Hart, and Short NVD. NVIDIA. Yeah, I don't do NVIDIA. Any opinion on Lulu? Sure. Give me a second. Lulu. All right. L-U-L-U. Lululemon. Why? What? Did you see this right here? Here we are here in the 205 area. And she goes from 205 all the way down to 175. That's a $30 drop. Well, a $30 drop is about 15%. From here to here is about 15%. Well, today we're up a little bit, but today still has the new 30-day bottom right there. So if you like Lululemon, I mean really like it, why not keep your eye on it? Because eventually, here's your bottom. You can't get any lower than that at this moment in time. So what happens? Well, you have one high of the year and you have one low of the year. So let's zoom out of this and see exactly where we are. Okay? So you get the high of the year, 420. And you have the low of the year, 160. That's a big drop. Well, here's the bottom of the year. Now, you've heard it over and over and over again. You want to make money in the stock market. You buy low and you sell high. Well, I hate to be the bearer of bad news, but you can't get any lower than today. Today is the bottom of the year for Lululemon. That doesn't mean she can't go lower tomorrow or the day after, because that's exactly what she's going to do. She's going to keep going down until she is done. going down. I mean, that's what they do. They go up and then they go down. And then when they're done going down, guess what? They go back up again. I know, it's amazing. It's a power bottom. Which indicator is best for OTC? Okay, good question. Riverside, nice up. Oh, nice. You go up by candles, a little bullish, springing top. They're right, wait on the confirmation, then enter the next EG candle. Okay, a little complicated, but all right. Parents, hey, you should figure out how to flip your video so everything is not backwards. It'll make a better content. Good luck. Well, you know what? You're like number 15 this week. Number 15 who points out the obvious. You know, everybody could say, hey, it's backwards. Great. How do you fix it? Well, if you don't know how to fix it, don't tell me it's backwards. I know it's backwards. But nobody can seem to tell me how to reverse it. Now, TikTok, simple. Little button, mirror the image. Great. TikTok works great. YouTube, Instagram, a whole bunch of other websites don't. So it's backwards until someone can figure it out. I wish I knew. I would tell you. Thank you, Long Sprinkler Guy. What IPOs are you going to buy? Come here. I don't do IPOs. Okay, Bachman, no IPOs. The only thing I do are companies that are consistently profitable, at least 2 decades. That's 20 years. Ariel, so fix it. Google it. Yeah, you make it sound like I've never thought of that. Silly me. I should have thought of that. Okay? I have thought of that, and that's why it's still backwards. All right, what stock? Well, we're looking at Lululemon at the moment. How to use the RSI and MACD? You're wrong question, dude. This is for a 9-year-old. Okay, my 9-year-old daughter said, Daddy, what are you doing? Can you teach me? So I'm going to show you exactly what I showed my 9-year-old daughter. And trust me, I didn't teach my daughter about the MACD. I didn't tell her about the RSI index. I didn't tell her about the Fibonacci. I didn't tell her about the Black-Scholes pricing methodology. I didn't tell her anything other than logic and common sense. Okay, there can only be one high. There can only be one low. And what happens when it hits the high of the year? Well, it comes down. What happens when it hits the low of the year? It goes up. And you know what? A 9-year-old, oh, yeah, I get it. Because it's as easy as that. Adults, you people have a tendency to make it more complicated than it needs to be. It was created for a 9-year-old. So why are you making it complicated? All right. Fannie Mae, Ashley, Fannie Mae. So Lululemon, if you really like it. Okay. If you really like it. Okay. Here she is up here. Here's your 30-day high, your 30-day bottom. She went up, she went down, and she gapped down. Now she's here. She is going to go back up when she's damn good and ready. So you look every day. So tomorrow we will look. And if she's up higher tomorrow, well, that's just one day to the upside. No, I want 2 days to the upside. And then on the 3rd day, I will jump in. If you like Lululemon. And it always comes down to that. Do I like Lululemon? Well, I don't, but someone else did. CRM, what the heck is, and that's never a good idea, Kyle, when I say, what the hell is CRM? Okay, now you may know who it is. You may like it, Salesforce. I've never heard of them. Okay, well, let's find out. Here's your high. Here's the low. Here's where it was. Here's where it is. Look, up, down, up, down. So 250, 232. The 252 is right there. It's over $3. Well, that works. So if the numbers work, if the chart works, what's next? Now, this is just the 1-year chart. Well, I want to get a better idea of where do I think it's going next. All right, so let's find that out. Okay, Ashley, hold up. Blaze, I'll take a look at that also. Splurge, gold and silver. Let me ask you a question, Splurge. Serious question. Are you ready? And I'll wait for the answer. I will. Now, you buy gold and silver. Great. Let's say you get a nice big fat chunk of gold. What kind of weekly cash flow are you getting from it? I already know the answer. Mostly everybody here knows the answer. I just want you to say it. Can you stop saying the N-word when you're explaining stuff? I have no idea what the N-word is. Nonsense, nincompoop, no. Hi, I am 270 calls, expired June 1826. Kyle, I have no idea what that means, but okay. Somebody likes PLTR. Okay, you have fun with that. I don't do that. Is it better to swing trade stocks weekly or just dollar cost average in the S&P 500? That's a good question. My answer would be it's always going to depend on what it is you're looking to get. So if you're okay with what the S&P's offering, okay, we'll take a look at that in a minute. So let's go take a look at the S&P and see if it makes sense to you. Who was that? That was Celery Sticks. Oh, interesting name, Celery Sticks. All right, well, let's go to SPY. That's the S&P 500, the ETF. Now, I want to look at historical data because anytime I buy anything or anytime I look at something, I want to see, is this consistently profitable? That's it. I get two goals and only two. One, consistency of profitability. Two, preservation of my capital, which means I don't want to lose. I mean, I'm pretty sure everybody here can agree with that. I want to make money and I don't want to lose. That's two pretty good ideas. Okay, so S&P. Okay, you want to know about the S&P. I'm going to go look at the historical data because the historical data is going to go back as far as I feel like going back. I'm only going to go back 2 decades. That's 20 years. Okay, that's going to give me an idea of, is this company or is this S&P profitable over the last 2 decades? That's what I'm looking for. Okay, now this is what you call the data stream. If you want to find out information of a stock, an ETF, or whatever, right here. The date, September 5. September 8, that's today. September 5, that's Friday. September 4, that's Thursday. September 3, that's Wednesday, Tuesday, so on and so forth. Okay, you got the opening price, the high of the day, the low of the day, the close, the adjusted, and the volume. All the information is there. What am I looking for? I'm looking for the dividend. Why am I looking for the dividend? Because I'm lazy. I have no desire whatsoever to read through all of the quarterly reports, all of the annual reports to see if this is a profitable company. I just have no desire to do that. So I'm going in through the back door. What do I mean? If it is consistently profitable, okay, that means the dividend will be higher and higher and higher. Because as a company becomes profitable, they share their profits. There's 2 different types of companies. Well, actually, there's 3. There's a private company, which you really can't invest in and it's irrelevant. But it's there. So the other 2, public companies that you can invest in. Well, one, their main focus is capital appreciation. They take all their profits, puts it back into the company, and the stock goes up through the roof. Well, if that's what you're looking for, you're in the wrong place. It's not what I'm looking for. It's not what I'm going to show you. Number 2, companies that are consistently profitable and share their profits. I'm 61, means I have to have my money coming in from somewhere. I'm not old enough to collect Social Security, and I've already had a peek at what they're offering me next year. What is it going to do? Pay my electric bill? Maybe. And my phone bill? Maybe. But it's still not enough to take care of my bills. All right. So I want a company that's consistently profitable and the profits increase year after year after year. Because think about it. Why? Who did that? Ricky! Thank you, Ricky. Why would you invest your money into a company that is not profitable? That boggles my mind. And believe it or not, there's a lot of you out there. You'll take your hard-earned money and put it into something that is just not profitable. Why? Why do you people do that? And I'm talking to everybody, but there's a few of you out there. All right, so here's the dividend. As the dividend increases, so do the profits. As the profits increase, so do the dividends. So I want to go back 2 decades. That's 2005. Okay, 2018, 2012, 2010, 2006, 2005. There it is right there. Okay, March 18th, 2005. Okay, so if this company is consistently profitable, means every single year, after year, after year, after year, the number will get higher and higher and higher. Well, that just makes sense. Okay, March 18th, 2005, 46. That's what it is, 46. Now, you can get somebody in elementary school, 3rd grade, 4th grade, 5th grade, and if you can't find one of those, maybe someone in 6th or 7th grade. But follow along if you will, because I'm sure you know it. You ready? 46. Very next one is 48. Well, that's higher. 52. That's higher. We're going good so far. 67. That's higher. Awesome. Higher and higher and higher. 51. Wait a second. Wait a minute. Time out. Time out. Time out. 51 is less than 67. So please, if you would, explain to me, if the company is more profitable this year than they were last year, why is this number smaller? It should be 68, 69, not 51. 67 to 51. That is a decrease. That is going backwards. That's not what we're looking for. We're looking for companies that are profitable. Hold on. Let's look at a few more. Okay? A few more. Here we go. 51. 55. That's higher. 57. That's higher. 79. That's higher. 55. That's lower. 55 is lower than 79. 55. 65. Higher. 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 Lower. Higher, 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 lower, lower. Not consistently profitable at all. So whoever asked about the SPY, the S&P 500, it's not consistently profitable. And here we're only at 2008 and 2009, and we got all the way to go. So that's 4 times so far it's been not profitable. Where are we? 51. Where is it? 51. Okay. 5 times. 59, 48, 6 times. 53, 60, 65, 55. 7 times. 55. 62.8, 62.5, 9 times. And we're only at 2011. Okay? Hold on, it gets worse. So 2011. Okay, right there. Okay, 2011, 77. 61. That's 9 times. 68, 77, 102, 69, 10 times. 83.9, 83.8, 11, 98, 82, 12. And we're only at 2014. We still got another 11 years to go. So my humble opinion, SPY, no, it's not consistently profitable. You ask my opinion, there's my opinion. Not profitable? No, thank you. Next. Naksuji, 67. What's a 67 for? I didn't say 67. I said 61. Allocation to RD. Are you talking about research and development? I'm assuming. It's just an assumption. I could be wrong. All right. How do I feel about ICT? All right. Hold on. We'll take a look at that one. Uh-oh, we got stuff going over here. All right, Ashley, Fannie Mae. Let's take a look at Fannie Mae, Miss Ashley. Are you ready? FNMA, FNMA. Here we go. Take a look. Oh, 1993, 96, 97, 98, 99, 2000, 2001, 2002, 2003, 2004, 2005. Here we go. 2005, 26. 2006, 26, no increase. 40. 2007, 40. 2007, 10. It went from 40 down to 10. That is a 75% decrease. Ashley, did you see that? It was from 26 to 40. Well, that's pretty good. But it went from 40 to 10. Then it went to 50. Then it went to 35. And then it went to 5 cents. So it goes from 40 cents to 10 cents to 50 cents to 35 cents to 5 cents. Now, I'm not quite sure about you, Miss Ashley, but to me, that doesn't sound good. But let's keep on going. 2008 is the last time they paid a dividend, and that was only 5 cents. So what happens when that stock goes down and we're not collecting anything? Well, why would I invest in it? Well, for me, Fannie Mae is going to be a no because they stopped paying dividends in 2008. Now, Blaze wants to take a look at Pepsi. I like Pepsi. Now, Pepsi is a dividend king. Well, that basically means PEP, Pepsi. Oh, hell no. Did you like that one? 30 days ago, here we are, way down here, 138. Shoots up to 158. Now she's dropping down. So eventually, this week or next week, there will be a bottom on Pepsi, and that will turn around and go up when it shows up. Well, when's that going to be? Well, it'll show up when it's ready. It'll come and knock on the door and say, hello, here I am. Well, if we like it, we'll look at it every day. What's wrong with that? I mean, isn't that what we're doing? We're looking at stocks that make sense to us. Well, Pepsi's on the list. Okay, they've been around for over 100 years. They have increased their profits every single year for over 5 decades. Not 5 weeks, 5 months, 5 years, 5 decades. Now, some of you in the audience aren't even that old. Pepsi has been increasing its profits since before you were born. Some of you, of course. Not everyone, but just some of you. Okay, Kyle James, CRM. What the hell is CRM? CRM. Salesforce. Didn't we just look at this one a little while ago? And I said I didn't know who they were and what the heck they did. Okay, here's your last 30 days. 30 days, we're at 240. We drop down 227, shoot up to here, pull back down. Now we're going back up again. Well, is that a good play? 252? Well, the 252 is here, and it's offering $3. Well, that's more than 1%. Remember what I told you earlier what I'm looking for? Simple, safe, predictable, consistent, 1% per week. Well, if I'm going to buy this at 252, I'm going to sell it at 250, and I'm going to bring in $3 per share. Now, $3 per share on a $250 stock, that is over 1%. And that's what I'm looking for, more than 1%. So let's keep on going. Never go on what you like. Always go off what others like. It's what I was always taught. Well, thank you. I'll keep that in mind. Kanan Hamad, N-O-N. What is N-O-N? N-O-N. N-O-N. Nothing. That's what that is. Lawn sprinkler guy, I appreciate you treating your repetitive, and I'm starting to finish your sentences. Well, that's a good thing, isn't it? Jello, thank you for that. That was nice of you, Jello, thank you. So lawn sprinkler guy, that could be a good thing, because repetition is the mother of skill. Okay, that's how you get your skill, repetition. Nick, SPYI as a high income dividend. Nick, hold tight for a second. Cuckster, thank you for that. That was cool. Nick, SPYI, SPYI. No. Okay, so Nick, this is why I don't do SPYI or anything else similar to it. September 25, October 25, December 25, March 25. Now, those are months of the year. JFM, woo, I got another crown. Yay for me. Those are months of the year. Now, we all know there's only 12 months in the year. So if I'm getting 1% or 2% each trade I do, well, 12 times, that's only 12 to 24%. Okay, so weekly, once per week, well, that's 52 to 100% per year. And it's a simple math problem. Nick, would you prefer 12 to 24 or would you prefer 50 to 100? So I think it's a no-brainer. But some people like SPYI, and it only has a monthly option, which means auto turn off. What? My screen's threatening to turn off. Oh. Anyway, please provide any info on KLAR. I never heard of that one. KLAR. KLAR, no. KLAR has no options. So, no. That's a no. Sorry. Jim, should I buy different stocks or just one? Okay, Jim, I have no idea who you are. I have no idea what you're looking for. So for me to give you advice would be not a good idea. Because I could, oh, what is that? Candy! Oh, it's gone. Jim, I have no idea what you're looking for. So it would be not a good idea for me to tell you to do anything. So, and I always say it every single night, I don't give tips. I don't give recommendations. I tell people simple, easy stuff like don't do margin until you understand the risks. Don't put money in the stock market until you have paper traded for a while. Never go on what you, I already did that one. How do you feel about ICT? Well, the strange thing about ICT, oh, where the heck did it go? Uh-oh. Oh, I can't find it. Oh, there it is right there. How do I feel about ICT? All right. ICT. ICT has no options. How do I feel about it? Not interested. That's it. I'm not interested. I don't want to waste my time looking at it because it doesn't fit. Asif Ali, ITW, Illinois Tool Works. No. Wasn't that quick? I don't do monthlies. September, October, December, March. I don't do monthlies. The numbers just don't work. FRK, when do you go live? 9 p.m. Okay. Ricky, thank you for that, Ricky. Can you stop saying the N-word when you're explaining stuff? Didn't we already say that? I have no idea which N-word you like or dislike. Stop saying the N-word, please. All right. Oh, your screen is backwards. Thank you, Riverside. Kate Malik, thank you. Another way to gamble. Thank you, Catfish. All right, Felix, I'm not going to pay attention to you. Option calls on CRM, nope. I have 100,000. How do I make money? I can't really tell you how to do anything. You have to tell me what it is you're looking for. And then usually between the two of us, we could probably find something that actually makes sense, if that's what you're looking for. Ariel Velez, what do you know? I know a lot. Seriously, I do. I know a lot. Okay? I know what the circumference of a 1968 Mustang's rear wheel is. I also know what the brake drum pressure is with the difference between a unpower booster assisted and a power booster assisted, because they do now have the power boosted kit on the aftermarket that you can add on to a 68 Mustang, which they didn't have in a long time. I can tell you a lot of stuff I know. You got to be more specific. Candy Cane, how are you today? Blaze, what 50 to 100 stocks, for example? You really want me to rattle off 50 to 100 stocks? That ain't going to happen. What do you think on dollar for the rest of the week? Are you talking about dollar rent-a-car or the US dollar? There's a huge difference between the two. You got to be more specific in the questions you're asking. See, the funny thing is, when you ask a generic question, you're going to get a generic answer. If you want a better life, you better come up with better questions. The better questions you come up with, the better answers you're going to get. The better answers you get, well, it actually helps you out better than mediocre answers. What do I think of dollar? Okay. JTM, how about Microsoft? I broke the rule and bought 4 weeks ago. Oh, you bought the high. Hey, one way to learn, MSFT. That's the only way to learn. You learn by doing stupid stuff, buying Microsoft at the high. Well, that wasn't very bright, because if you look, here's your bottom right here. It shoots up, 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 up. Well, what do you think this one's going to get there? You get all this distance from 340 to 560. Yeah, people are going to take profits, and they did. Look, let's zoom into that a little bit closer. Okay. Back in July. July is at 505. Shoots up to 555. That's a 10% increase. And then it drops down here to 495. Well, this is where we are now. Yesterday is the new bottom for Microsoft. Today is higher. Well, 2 more days, I'll jump in because I like Microsoft. And no, you can't get away from Microsoft. There's certain stocks you can't get away from. Candy, thank you. Uh-oh. Eli Lilly. Now, see, Eli Lilly, I think that's out of my price range. Okay? So however much money you think I have, no. I don't do stocks over $300. This is 738. Here's your top, here's your bottom. Goes up, comes down, goes up. Bottom is here, she shoots up. What do you think is going to happen? From 620 to 738. That's a $118 move. Do you really think that people aren't going to take profits and the stock's going to drop? Well, that's what happens. Stocks go up, people take profits, stock drops. When the stock drops far enough, people start buying, and then the stocks go up. Goes up high enough, people start selling, and the stocks drop. That's all they do. They go up, they go down, they go up, they go down. Okay, that's about it. Sammy, any idea about USD? Please, for the rest of the week, according to inflation expectations, the Fed rate cut. Okay, I'm not quite sure what you want to say about that, but I have no idea what's going to happen with the rate cut. And I have no idea what's going to happen to the US dollar. I don't invest in the US dollar, and everything I do has nothing to do with the Fed rate cut. So it's one of those things that just doesn't pertain to what I'm doing. Okay. Riverside. So is this long-term stuff? No. I jump in on Monday, and I like to be out on Friday. You can call me a weekly trader. Low risk, high yield factor. Thank you. Well, Riverside, it's not. God Nika, good evening. Kyle, do you want growth or dividends is the question. Kyle, I already answered that question earlier. I want cash flow. That's not growth. That is dividends, and that is income. Sometimes you lose out on growth and going with dividends. An example, PLTR. buying at 20 versus ET at 18. Okay, hold on a second. You like PLTR. All right, well, let's take a look at it. PLTR. There you go. Whoa, I didn't do that. PLTR. All right, here's the high, here's the low, here's where it was, here's where it is. Look at this, up, down, up, down. Now she's going sideways. Okay, great. You like it? Wonderful. Let's take a look at the profits. How profitable has PLTR actually been? So for that, we go to Yahoo Finance. If you're going to be investing, you really need to have at your fingertips a financial website. PLTR. Okay, hold up, PLTR. I'll say, look at that. There are no dividends in this selected time period. So let me see if I get this right. The name of the show is Dividend Stock Talk. Okay, Dividend Stock Talk. Well, doesn't that mean the stock should have dividends? Think about it. Dividend Stock Talk. Oh, the subtitle. Dividend Investing for Weekly Cash Flow. The word dividend is in that one also. You know it's not in dividends? No dividends in PLTR. So here's an issue. Okay? If PLTR has no dividends, then how do you know when the stock is going to move? Hold that thought for 1 second. Okay, Kyle, let me show you something, Kyle. Here we go. And here we go. This and nope. And that one right there. Here we go. Right there. Okay. So Kyle, this right here is called an EX dividend calendar. Let me read you a few. Lennar, Nordson, Ben Franklin, Stanley Black & Decker, McDonald's, Kimberly-Clark, Pepsi, Genuine Parts, Albemarle, Chubb, Medtronics, Rupert, Cardinal Health, Illinois Toolworks, Ben Franklin, Cincinnati Financial, Coca-Cola, T. Rowe Price. You probably heard of all those. Probably. Not guaranteed, but probably. Okay. Now, this is an EX dividend calendar. September 2025. Today is the 8th. Okay. BDX is actually paying their dividend today. So what is the reason why, oh my God, Colin, seriously, MSTY? Have you even, do you even look at what you're buying, Colin? Seriously, we're going to look at that one next. Because, dude, it's just like, oh, anyway. The reason why I use the calendar, because just before the dividend, the stock goes up in value. Okay. No. Did you create a dividend calendar? Yes, I did. Anyway, just before the dividend, the stock has a tendency to go up in value. Now, if it doesn't have a dividend, you don't know when it's going to go up in value. That's one of the reasons why I like dividends. Well, number one, a dividend also tells me how much money the company's made. Because if the dividend goes up, that means they made more money this year than they did last year. That makes sense, right? Why would I invest in a company with no dividends? Well, now I have to look at the quarterly reports. Well, there's 10,571 companies. How many should I read? Well, I've seen PLTR. They have no dividends. So how am I supposed to know when is a good time to buy them? Now, if I'm looking at Cincinnati Financial, they have the dividend on the 22nd. Well, knowing that a stock goes up in price just before the dividend, well, I'm going to want to buy Cincinnati Financial on the 8th, the 9th, the 1st, the 2nd, sometime before this date. Because if the stock goes up before the dividend is paid, well, I want to know that information, and I want to be able to trade it and be able to make money off of it, because that makes sense to me. Well, PLTR doesn't have a dividend, but let's check on something else. the summary on PLTR? Let's find out. What does the summary look like? Okay, come on. All right, here it is right there. Are you serious? Kyle, did you see this number here? Earnings per share, 31 cents per share. The stock is $156. $156, and it has 31 cents per share earnings. That's it. 31 cents per share. And you think that's, hold on. Statistics. Let's go take a look at statistics. Statistics, more information. What else do I need to know? Revenue per share. Revenue per share, $1.49. $1.49 revenue per share. And you think that's good. Hold on. Book value, $2.50. Kyle, do you have any idea whatsoever what book value actually means? Book value actually means if you take every single asset, every single intellectual information, technology, everything the company has to its name, you sell it off and pay off all the investors. Break even. What is it? $2.50 a share. That's it. You're paying $156 for a $2.50 stock. Because worst case scenario, absolute worst case scenario, the Supreme Court comes in and say, yo, you guys got to divest. You got to sell off everything and pay off your investors. Well, guess what you're getting? You're getting $2.50. That's it. You can say, no, that's not right. You can bitch, moan, complain all you want. The book value is what the book value is. Stomp your feet, bitch, moan, toss a fit. It ain't going to change anything. Revenue per share, okay, $2. Earnings per share, 31 cents. And you think that's good. Hold on, let's take a look at another one. A company that's over 100 years old. Okay, you've heard of this one. Over 100 years old. Revenue per share. How much money do they have coming in per share? Each one. $182 per share. That's the revenue coming in. Okay? The stock is $58. That's it. $58. The revenue coming in is $182. Okay? Well, what's the book value? Okay, what is it actually worth? Well, you're paying $58. The company is actually worth, it means liquidate everything, sell everything. Pencils, pens, crayons, markers, blackboards, factory machinery, everything. Sell off everything. Book value for this is $69 per share. You're paying $58 for a $69 stock. But no, you want to pay $150 for a $2 stock. What the hell's the matter with you? Now, you know what? You invest your money however you want. You think PLTR is great? Good. Have at it. I see what the book value is. I see what kind of profits they make. I have no desire whatsoever. Okay? I only want to invest in companies that are consistently profitable. And $2 a share doesn't really thrill me. Sorry, I'm not going to pay $150 for a company that's only worth $2.50. It just doesn't make sense. Same thing for who? Who said ULTY? And who else came up with MSTY? Colin. Colin, do you take a look at what you're buying? Let's take a look. MSTY. Just for the fun of it. Okay, MSTY, $15. Oh, wow, it doesn't have it? No, come on. It's got to have it here somewhere. Summary. Oh, this one doesn't have it. It doesn't tell me what the book value for this company is. Okay, well, let's go take a look at what kind of dividend. Colin, what kind of dividends is MSTY paying? Historical data, MSTY, $15 a share. Okay, let's take a look. All the dividends. Oh, bummer. Dividends only. Let's look at all the dividends. All right, so here are the dividends for MSTY. Now, Colin, am I reading this right? The very first dividend was April 4th, 2024, which makes this company not even 2 years old yet. So you're investing your money into a company that's not even 2 years old. Let's take a look at the profits, shall we, Colin? $4.12. $4.12, okay, right there, $4.12. Second dividend is $2.50. That's like a 70, no, that's not 70%. What is that? It's like a 40% drop. 40% drop, Colin. First dividend, $4.12. Second one, $2.52. That's lower. Then she goes back to $3.03. $2.33. That's lower. $1.94. That's lower. $1.85. That's lower. $4.19. Well, that's better. $4.42. Even better. $3.08. Lower. $2.27. Lower. $2.02. Lower. This thing goes down more than it goes up. So what the hell are you thinking investing your hard-earned money into something that's not consistently profitable? Never mind. I'm not even going to bother anymore. Let's get out of this one. It boggles my mind. People take their hard-earned money and they don't even look at what you're investing in. Nina, which are the best dividend stocks for monthly cash flow? Well, if you're looking for monthly cash flow and you want the best of the best, that's the Dividend Kings. They have 5 decades of increased profits. That means can't see your chart. Why can't you see that chart? It looks big enough. Do you want growth or dividend? I want cash flow. My husband kept telling me we have a 401k, but when I went to withdraw, we only had $2,200. So what happened to that 401k? I have no idea. How does it go from 401 to 2,200? Yeah. If you spend it, dude. Yep. Collect that monthly dividend. There you go. Nice joke, Virtus. Do you ever have a scanner tell you which stocks to look at? No. I only... All right. It's an interesting question. Who asked that question? Okay, Ariel. Okay. I don't need one. Because all I have to do is take a look at Dividend Kings List 2025. And lo and behold, it will pop up. And those are the best of the best. And then you got the Dividend Aristocrats, 25 years of increased profits. Then you got the Dividend Champions. Well, they're already listed. So why do I need to do a search for them? Well, the search is a simple Google search. Dividend Kings List 2025. Lo and behold, it just pops up. That's the best of the best. Okay, Dividend Aristocrats, 25 years. Dividend Aristocrats List 2025. Guess what? It just pops up. Okay. Righty. Let's keep on going. Colin, thank you for that. Zenveg. Okay, Zenveg. Okay. Martin Peter Pedelson. Okay, thank you. Paul, good evening. All right, K-Van, VFC. Interesting. Very interesting. Take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. She goes up, down, up, sideways, and then up again. We're at 15.57. The 16s are going for 17. That's over 1%. Well, that's what I'm looking for. 1% every single week. So why not? Well, let's take another look at it. A year ago, gonna need the glasses for this. Veritas, thank you. Dustin. YouTube's built-in live tool don't have a direct flip option. Yes, I'm aware of that. So use OBS Studio free. Okay, I am. Okay, see, I have YouTube on 3 different accounts. 3 different accounts. You get the one here, the one over there, and the one down here through the OBS. So yeah, OBS is broadcasting live on just the screen. Okay, just the screen itself is live on YouTube, so you can look at it on your big screen TV. All right, 60K, then 260K plus 5 minutes on Wi-Fi. That new Trump coin. All right, I'm not even going to bother with that. I don't do Trump coins. Buy low, sell high. Thank you. What year is that? What year is what? This is last year. This is 6 months ago. This is 3 months ago. This is today. What do you mean, what year is that? That's a 1-year chart. That's exactly 1 year ago. That is today. Why am I still here? Ariel, I have no idea. Rate cut. Yep, don't even bother with it. What about SDY? Steve, what the hell is SDY? Well, before I do that, let me finish up with VFC. I actually have some of this. Okay, so a year ago, we are at 17. What was that again? 1770. The high of the year, well, that was at the end of January, 2906. Well, the end of the beginning of April, we got the bottom, 932. Well, if you got your bottom here, 932, well, today we're at 1557. Not a place I want to jump in. Buy low, sell high. I don't want to buy at the high. Let it go. That's just my humble opinion. What the hell do I know? All right. The last Brohican. Oh, cool. Last Brohican. Walmart. WMT. Oh, yeah. WMT. WMT. Interesting. A year ago is the bottom of the year for Wally World. The top was somewhere in February. She drops down to April, shoots on up last month, drops down, goes back up again. This is the area I want to look at. We're currently at 102.28. So the question should be, do I like Walmart at 102.28? Hold on, I got a question over here. Couple of questions. Did you create? No. Can you get it from Thinkorswim directly? CJ, this is Thinkorswim. And yes, the calendar is in Thinkorswim. Okay. James, darn, I was hoping it was automated in the Charles Schwab app. It is automated in the Charles Schwab app. Okay, you come right up to here to Market Watch. Okay, you click on the Market Watch right there. And there's the calendar right there. Calendar. Okay, finance rates. Okay, visualize, alerts, quotes, all that kind of nice, neat, fun stuff. I don't look at any of that. That's got nothing to do with me. I like the calendar because that means something to me. It's like, what stocks am I looking at this week? Well, I'm looking at Cincinnati Financial and Medtronics. Well, I like both of those. All right, so we're in Walmart. A year ago, the bottom, 76.75. The high of the year, middle of February, 105.36. The bottom of the year, the first week in April, or second week in April, 79.78. Well, from there, here's your high, here's your low. She shoots up, goes sideways, up, down, up. Well, it's going up now. Well, is it going to continue to go up? Well, that's a good question. We don't know. I'm looking for something and I can't find it. All right, anyway. All right, so last 30 days. Now, see, the reason I look at the last 30 days, because it gives me a good idea of where do I think it's going next. Well, 30 days ago, today was the 30-day high. You get a 30-day high, it drops down to the 30-day bottom. Then from the 30-day bottom, she shoots up. Well, we're here now at 102. The high's at 105. Is there enough room to jump in here and go up to there? It's not a lot of room, but is it enough room? Nope, not what I'm looking for. That's not what I'm looking for. All right, I'll just have to find it later. All right, besides the point. So, do I like Walmart? Well, of course I do. It's Wally World. Doesn't everybody like Wally World? All right, that being said, if I'm buying it tomorrow morning, 102, I'm going to sell the 102s and pick up 104. Not quite 1%, but do I like Walmart? Oh, nasal coit. I can't read that one. That doesn't make any sense. All right. Ooh. Huh, Ara, so rude. Someone's rude. All right. Where are we? All right. VFC we looked at. Ooh. D-Van wants to take a look at SLB, which is Schlumberger. SLB. SLB. Okay, same thing. Here's your high. Here's your low. Okay, up, down, sideways, down, up. So right here at 35.80, the 36 is going for 42. That's over 1%. Now, Schlumberger is a dividend king, which means they've been profitable for quite a while. So let's take a look. Any idea about USD? No, I don't do the US dollar. Sorry. David Johansson wants to take a look at Ford. Okay, Sully, you need to buy 100 shares of said company to use this method. Yes, you do. It's called a covered call. There's literally hundreds of videos that tell you exactly how to do a covered call. Cincinnatus, 1977, wants to take a look at Apple. Mark, greeting, James. Thank you for the SPY explanation. I learned something new each time you explain it. Okay. What's your perspective on NVIDIA? Oh, come on, seriously? Like, why do you guys like the shiny objects? Don't you read the financial reports? Take a look at NVIDIA. They have a 1 penny dividend. 1 penny. And that's like 0.03%. That's not even 1% for a year. It's 0.03% for a year. No, the numbers are just horrible. But if you like it, hey, you do it. You do what works for you. Only O gives monthly dividends. Okay, thank you for that. I might say you're wrong, but hey, it is what it is. Cincinnatus. Let's look at Apple. AAPL. Ooh, that's going to be a no. Okay, I don't buy anything at the high. See that? Here's your bottom here. 202 shoots up to 240. Now she's coming back down again. But that's what it is. Here's your high there. Here's your low there. She goes up, she goes down. She goes up, she goes down. She goes up. Well, what do you think she's going to do now? It just makes sense. Which company gives you weekly dividends? Nobody gives weekly dividends. And I didn't say weekly dividends. And Nima Svev, only O gives monthly dividends. I'm going to disagree, but okay. Candy Cane, can you only part, oh, can only see part of the screen? Oh, am I in the way? Is that what it is? I don't know. Eric, UNH. Okay, UNH. Interesting. Now, we have a couple of people in our trading group that like UNH. The top of the year was at 650. The bottom, 240. So, you know, sideways, down, up, down, up, down, up, down, up. So now it's going up. It's at 320 at the moment. So let's zoom in a little bit closer. Does that seem to make sense? Okay, what do you think? This is UNH for the last 30 days. Here's your 30-day bottom. Here is your 30-day top. Goes up, sideways, up. Can it keep on going up? Well, yes, it can. Is it going to? I don't know. Is that something you want to try? I don't know. Okay, is it something that you like? Well, if you like UNH, it's at 320. And the 320s are going for 535, which is over 1%. So let's do a sample trade on UNH and you'll see how it works. Simple. What we want to do is get rid of this because we already figured out 320 is the number we like. Change this to covered call. Now, like I said earlier, there are literally hundreds upon hundreds of videos explaining the covered call. So if I'm buying it at 320.25 and I'm selling 320, I'm going to collect, well, I'm going to buy it for that number right there. Let's see what the numbers look like. 320 right there. Here we go. I'm just going to do one contract. Makes it a little easier. All right. Here we go. You ready? Buy one covered call UNH. That's the weeklies. 12 September, that's this coming Friday. The 320 call option against the stock at the market to open, blah, blah. That's the order. That's what it sounds like. That's what it looks like. So, profit, 527. It cost me $31,000 to buy 100 shares of UNH. If you like UNH, so let's take a look at the numbers. You're going to need the calculator. Okay, profit, 527. What is it costing? What's the investment? $31,473. Gives me a profit of 1.67%. Now that's what I want for 1 week, 1%. Well, that's over 1%. That's 1.6. So that's going to give me a halfway decent return for the end of the year. That's what I'm looking for. All right. All right, so we're going to do something a little bit different tonight. I'm actually going to sign off early, and the reason why I'm going to sign off early is I got to fly to Canada tomorrow morning, up to, where the hell am I going? Ontario. Now, I'm going from Florida to Ontario for 1 day. So I'm going to be there for 2 hours, and I'm going to fly back. Well, you know what they say. It is what it is. All right, so David Johansen, Ford. I don't know, David, what do you think? You bought him here, shoots up, pulls back, it's just kind of going nowhere. $11, the $11 is going for 67. Wait a minute, no. The 1150s go for 24, losing 19. No, because then I'm walking with 5 cents. No, the numbers just don't work on Ford. Sorry. Apple, AAPL. No, I don't buy at the high of the year. Just doesn't make sense. What else do we have? Juan, thank you. Sammy, thank you. Knowledgeable investor. I notice you go right at the money when pick your strike. I go normally pick a 10 delta. Well, you're looking for something different than what I'm looking for. I'm looking to get in on Monday, and I'm looking to be out by Friday. Okay, capture more share price appreciation. Yeah, I get that. I'm not looking for share price. I'm not looking for, what do they call that? Market growth. I'm not looking for that. I'm looking for collection of premiums. Collect the premium and share the price appreciation when I sell a covered call. I get it. Rudy wants to take a look at UPS. Oh, Rudy, check this out. A new bottom today. So I like a bottom, okay? This one happens to be the bottom of the year today. Now, can it keep going down? Yes, it can. But think about it this way, okay? As it continues to sink, I'm looking for the bottom, because as soon as the bottom shows up, it's going to turn around and go back up again. That's where I want to jump in. So UPS, not today, not tomorrow, maybe not even this week, because even if this is the bottom here, I want 3 days to the upside. That would be Tuesday, Wednesday, Thursday, and then I'd jump in on Thursday or Friday if everything works okay. Goelo, 40 to 10 is definitely not 75. Unfortunately, it is. Okay? From $40 to $10 is a 75% decrease. You're mixing the words and you're not actually listening to what I'm saying. Okay? So from $10 to $20, that's 100%. From $20 to $30, that's 200%. Wait a minute, that's 150%. And then from $30 to $40, that's going up this direction. 30 to 40. Oh, $10. Oh, come on. I forget where I'm going with that. But anyway, from $40 to $10 is a 75% decrease, because $10 is 25% of 40. 10 is 25%. 10 and 10 is 50. That's 50%. Another 10, it would 75 would be 30. That's 75, and 100% would be 40. So 75% decrease on a $40 stock is $10. So I have no idea who you are, and I don't want to insult you, but $10 on a $40 stock is a 25%. So going backwards, 40 to 10 is a 75% drop. That's UPS right there. Okay, I have no idea who that BZ335566. Yeah, you get the bottom right here today. Now, if you like picking the bottoms, you might do good at it. I don't try to pick the bottoms, but this could be it. But we said the same thing 2 days ago, and then we said same thing 2 days prior to that. Okay, so here was the bottom, then it went down, then it went down, then it went up, then it went down. So now today is a new bottom for UPS. So UPS will skyrocket. That's not what I said at all. Okay, when you're investing in the stock market, you buy low and you sell high. Okay, we all know that. Everybody knows that. Make money stock market, buy low, sell high. Well, you can't get any lower than the low of the year, which is where it's at today. Okay, so that's it for all the questions there. Okay, what's your perspective on NVIDIA? Okay, DC, I already told you about NVIDIA. They have a 1 penny dividend. Yeah, no thank you. Okay, BZ335566, that's not what I said at all. Okay, do not misinterpret what I said. I don't give advice, I don't give tips. I just point out the obvious. The obvious for UPS is today is the low of the year, which means absolutely nothing. Because tomorrow it could go lower or it could go higher. It gets 50-50 shot. It's either lower or higher. How do you lose money if you never sell at a loss? By hitting the wrong button, Mike. Seriously, I kid you not. It sounds childish. It sounds juvenile. It sounds like something, oh yeah, I'll never do that. Trust me, everybody does it. I did it 4 times this year, and I've been trading for over 30 years. Steve the Legless, 40 being 100%, so 10 would be a 75% drop. Thank you there, Mr. Steve. Somebody knows their arithmetic. What is this? What is his point? Try showing me a company in stock market history that has been profitable for more than any ticker that mimics the S&P 500. Oh my God, I've been waiting for someone to be as stupid as that to ask me that question. All right, let's do it. This is going to be fun. I can't believe somebody was that stupid to say something that stupid. All right, let's go. Let's take a gander. All right. S&P 500, SPY, SPY. Here we go. You ready? Seriously, are you ready? You want to see a stock, one stock. I can come up with more than 150 of them. Seriously, I could. Okay, here we go. We want to see all the dividends for S&P. Okay, all right. Just so we're not, S&P 500 ETF. Okay, it mimics the S&P 500. It's just, whatever it is. But anyway, here we go. Are you ready? Here we go. All the way back to 2005. So count with me if you can. You ready? 2005, 46, 48, 52, 67, 51. There's one. 55, 57, 79, 55. That's 2. 65. 71, 77, 64, that's 3, 66, 69, 71, 56, that's 4, 51, that's 5. We're not even close yet. Keep on going. 51, all right, 51. 50, that's 6. 59, 48, that's 7. 53, 60, 65, 55, that's 8. 55, 62.8, 62.5, there's 9. 77, 2011, December 2011. We're up to 9 so far, December 2011, right there. Okay, 77. 61, that's 11. 61's 11. 68, 77, 102, 69, that's 12. 83.9, 83.8, that's 13. 98, 82, that's 14. We're at 2014. That's 14 so far. 14 times it went backwards. Hold on, I ain't done yet. Okay, 90, 82. 93.7, 93.9, 113, 93. 15, 103, 103.3, 121, 105. 16, 107, 108, 132. December 16, 132, December 16, 132. 103, 17, 118, 123, 135, 109, 19, 20, 124, 132, 143, 123, 20. 20 times. Hold on, and I'm not done yet. I got to switch these cameras. Let me switch these cords. Hold on. We're at 20, and we're only at 2018. Okay? We're at 2018, and we've gone down 20 times. Hold on. 2018. Okay. 124, 132, 143, 123. That's 21 times. Okay, 143. 138, 22 times. 157, 140. 23 times, 136, 24 times, 133, 25 times, 158, 127, 26 times, 137, 142, 163. That's 2021, 163 right there. 136, 26 times, 157, 159, 178, 150. I forget count. We're at like 29, and we're only on 2023. 29 times S&P 500 went down. You don't like it? Fine. Look at the numbers yourself. If a dividend goes down, that means the profits went down. Plain simple. Point blank. You don't like it? Too bad. Too bad, so sad. Okay, let's do GPC. GPC, Genuine Parts Corporation. Well, 2005, 31. 2006, 33, 2007, 36, 2008, 39, 2009, 40, 2010, 41, 2011, 45, 2012, 49, 2013, 53, 2014, 57, 2015, 61, 65, 67, 73, 76, 79, 81, 95, 103. Every single year that one went up. Well, guess what? That's Genuine Parts Corporation. They have increased their dividends. They've been profitable for seven decades. Has the S&P done that for 7 decades? No, it has not. But hold on. I got a whole shitload more stocks that actually increase every single year. The S&P 500 does not increase every single year. It's a 50-50 shot. Sometimes it goes up, sometimes it goes down. You want to come out with me, brother, you got to come out with me a little bit better numbers. And what you said, no, not at all. Isn't that a, hey, Sweeney, how you doing? Oh, Coke better, everyone knows. Not necessarily so. Let's pull it up. Pepsi, PEP. Now, both Coke and Pepsi are both dividend kings. They are both over 100 years old. However, Pepsi is at 141.72. Okay, well the closest, sorry, 141.71. The closest strike price to this is the 142. It's paying 129. So let's do some quick math. We're going to get the calculator. 129 divided by 141.71. Divided by 141.71. Grand total of 0.9, just below 1%. Great, let's pull up Coca-Cola. KO, Coca-Cola. $67.43. The 67 is going for 77 cents. If I sell the 67s, I'm losing 53 cents. We're not going to do that one. 68, 28 cents. Well, let's do the math. 28 cents, 0.28 divided by, what's the current price? 67.43. 67.43. Grand total of 0.4%. Now, explain to me again why you think 0.4%, which is less than 0.5%, is better than 0.9. Seriously, why do you think 0.9 is not better than 0.4? It boggles my mind. So if the stock drops and you are stuck with the shares, do you choose the same strike price to sell? Levi, no. And number one, you're not stuck with the stock. Okay, number one, you never ever buy a stock unless you're okay with owning it. So if you don't like it, don't buy it. Rule number one, never buy something you don't want to hold on to the day you die. Most people buy stocks and collect the dividend every 90 days, which is once per quarter. That's what normal people do. Well, I'm far from normal. I want weekly cash flow. So if I buy a stock, I want to, number one, make sure it's a good company. That's number one. Number two, I want to make sure they're consistently profitable, which means they consistently increase their profits year after year after year. Then I want to be able to buy it and sell it and make a profit on a weekly basis equal or greater than 1%. That's my goal. If the stock goes down, oh well, I still own it. Let me give you a perfect example. IBM. Okay, here's IBM. We all know who they are. Here's the high, here's the low, here's where it was, here's where it is. Look, up, down, up. Okay, great. I own IBM at 285 right there. That's where I own it. So let's go right here, see where we are. 285. I own it at 285. Right now it's 256. I collect the dividend every 90 days, but what else am I collecting? Well, if the stock is at 256, I want to look at the 257s or the 260s. Well, the 260s are paying $1.13. Okay, that's $113 per contract. So if I have 1,000 shares, this week I would be collecting $1,130. Even though the stock is still down from where I own it, 285, now it's at here. But if I'm selling the 260s, I'm still collecting $1,300, $1,100 this week. So next week, I will take a look at the number again. Maybe I'll do the 260s or the 262s or the 270s. Every single week it changes because every single week the stocks go up, the stocks go down, stocks go up, stocks go down. Think of it this way. Think of it as a vending machine, a candy machine, a soda machine, gumball machine, whatever you want to think of it. Okay? If the stock goes up, okay, it's irrelevant. What am I buying it for? What am I paying for this vending machine? So let's say I get 100 shares at 256. That's $25,000. $25,000. It's a cash producing weekly asset. All right, Levi, if the shares get called away, then technically is sold at a loss. 100% honest question. Okay, Levi, let me ask you a question. Okay, seriously, see if you follow along. If I buy the stock at 285, right? Because I bought it, what is that? 1, 2, 3, 4, 5, 6, 7. 7 weeks ago, I bought it at 285. Okay, I agree with you, 285. That's what I paid for it. Now, it's here, 256. Now, 7 weeks ago, I sold the 285s. I brought in a premium. Okay, 6 weeks ago, it was down to 260. I sold another premium, collected another premium. 5 weeks ago, I sold a premium, collected another premium. Same thing, same thing, same thing, same thing. So I got one premium here, one here, one here, one here, one here, one here, one here. I will do this until the day I die. And rule number 2, never, ever sell at a loss. It defeats the purpose. I will never, ever, ever sell my IBM for less than 285. I will roll this thing out as far as I possibly can to avoid losing. So if I'm getting, 1 or 2% at the current price, I will go far out of the money and do the 265, which is 4 strikes out of the money, and collect $36 per contract. 10 contracts, that's $360 to do absolutely nothing. It's a numbers game. Rule 1, never buy something you don't want to hold on to. Rule 2, never, ever sell at a loss. Oh, so you will continue rolling to a call higher. That makes sense. Thank you. Doesn't know what a SMRT is. Okay, I don't know what an SMT is. What is an SMT? Anybody? SMT? I have no idea. I could give you a bunch of acronyms, whole bunch. ITM, OTM, ATM, Sky. I could give you a whole bunch. We can do this all day long. So you throw 3 letters at me and I'm automatically supposed to know what it is? No, sorry. I don't play that game. Ramp Hill Capital. Always roll for puts and calls. Avoid assignment and shares call away. Thank you very much. I'm going to agree with you 100%, dude. Thank you. All right, so I'm going to call it quits for tonight because I got to go pack because I can get up at 4 in the morning to go fly to Ontario. Love the IBM move. I like it too. I would have preferred it not to drop the way that it did, but I can't do anything about that. Okay, so I'm going to see if I can finish up some of these questions. Darn, I was hoping automated. Okay. CJ, you can get it from here too. Okay. Just search Google. Yep. Okay. Thank you. Thank you. All right. There you go. Alrighty. Hollywood is in the house. Way to go, Mr. Hollywood. How about Bitcoin? Go on. Coke better. Everybody knows. Not necessarily so. It depends on what you're looking for. If you're looking for a higher rate of return, Pepsi is better than Coke. If you're looking for better flavor, well, then maybe you might like Coke. It's a perspective. Might like it, might not. Who knows? But no, Pepsi has a better rate of return than Coca-Cola does. Eric, we already looked at UNH. Nike, KR. Cuxter, Kroger, not yet. I got $40. What stock should I buy with dividends? Paul, I can't do that to you, brother. I know nothing about you, and I don't give tips and I don't give advice. Sorry. Brian, Riot, Coney, no. I hate Walmart. They give you a hard time to do returns. Okay. What's your analysis of Lululemon? Where you did that one? Thanks for the information. You like it? All right. Thank you. What about Bitcoin? Nope. Broadcom, take a look at another day. I get what you are saying about needing consistent income when you are on a fixed income. Thank you. But how much do you need in your account to make enough in dividends if stocks are only yielding 5 to 8%? Okay, celery, you were not paying attention, which is perfectly fine. I'm used to people not paying attention. What I'm doing is buying a stock, collecting the premium on a weekly basis. That premium equals 1% every single week. So 1% every single week comes to over 50% per year. It's got nothing to do with the dividend whatsoever. The only thing I want the dividend for is to confirm that the company is consistently profitable. That's it. That's all. Okay. So if you're in the money and you roll before expiration, always taking a look at it, Mike. Always, always. But you're right. Coney, hell no. Brian, Riot. Hormel Food, ooh, Dividend King. Oh my. Is there anything else we should know? I'm new, so I don't really know. Okay, oh my, come back every night. Okay. How do you lose money if you never sell a loss? Mike Sweeney, I told you that. You hit the wrong button, and it does happen. How are you live in 2 streams yet have 2 completely different conversations? No, dude. I'm live on 9 streams. 9. So I don't have 2 conversations. I got one here, one here, one here, one here, one here, and one here. I get 6 conversations going at once. Sometimes it's challenging. Some people get upset that I'm trying to talk to too many people at once. Well, I'm here creating a video diary, a video dialogue, if you want, for my children and my grandchildren. So when I am gone, they will have something to look at. That's it. The only way I'm going to live 50 to 100 years from now is through the videos that I create for my children, grandchildren, and great-grandchildren. Okay, that's what I'm doing this for. You just happen to be here to catch on some of this information. Well, it's good information if that is what you want. Okay, and I'm very right up front. I share 3 of my accounts. I got 7. I share 3 of them so you can see every trade that I make. Okay? Oh, fool doesn't know Salesforce. Travis, let me ask you a question. How often has Salesforce increased its dividends? Has it increased its dividends for 2 decades? Because when I said I only want to invest in companies that have 2 decades of increased profits, Salesforce does not. So call me a fool if you like. Guess what? I really don't care. Salesforce is not on my list because they have not been profitable for 2 decades. That's it. It's as simple as that. Dividend Kings, 5 decades of profitability. Dividend Aristocrats, 25 years of increased profits. Dividend Champions, 25 years of increased profits. Dividend Contenders, 10 to 24 years of increased profits. That's over 300 different companies. I'm terribly sorry that Salesforce is not on your list. Suck it up, Buttercup. I really don't care. Seriously, I don't. Salesforce doesn't fit. So why should I bother wasting my time looking at it? It's actually that simple. If it fits, if it's profitable, yeah, I'll take a look at it. If it's not profitable, I will tell you, no, it doesn't interest me. And if I offend your little feelings, tough shit, grow up. Okay? This is not preschool. It's a simple scenario. Either they're profitable for 20 years or more, or they're not. And guess what? Fool doesn't know what Salesforce is. Yes, I do. I know who they are, and I know they don't have 20 years of dividend increases. So it's a no. Absolutely no. So why should I bother wasting my time? You waste your time with it. You do what you want to do. Okay, where are we? AMD, Advanced Micro Devices. Okay, another time, but all righty. All right, what else we're looking at? How can you learn your system? Just keep showing up, keep asking questions. As simple as that. Project sobriety. Eye on cue. Okay. Fool can't fix the screen after hundreds of live streams. Oh, Travis, you know what you can do? If you know the key to doing it, fine, share. You don't know? Keep your mouth shut. You got nothing good to say? Don't say anything at all. Negativity ain't going to get you anywhere. Slew Charles, I always go off what I like. There are 1 million people just like me. There are actually more than 1 million people just like you. I'm invested in small gains, 20,000. Is it worth it? Non-aggressive, seems like a waste of a slow gain. Should I bet it all in Vegas? Okay, I'm not going to tell you to bet it in Vegas. And I can't tell you if this is right for you. It's not right for everyone. It's slow, it's boring, it's monotonous, it's the same stocks over and over and over again. But here's the thing, the same stocks over and over and over again. Well, they're all profitable. They're all consistently giving me 1% per week. So 1% per week, terribly sorry, it's not a lot of money. If you're looking for more, and I tell you this right up front, if you're looking for more than a 50% return on an annual basis, this ain't the place for you. It's actually that simple. I'm not looking for capital growth. I'm not looking to buy a stock and just wait for it to shoot to the moon. No, I'm 61, have no desire, none whatsoever. And yet you get all bent out of shape because I don't like your little pet stock. Terribly sorry, it don't fit. You like it all you want. It don't fit, it don't fit. An option is a derivative security. I'm aware of what it is. An option is the right, not the obligation, to buy a stock at a certain price by a certain date. That's all it is. It's a non-refundable deposit. Hey, I like your stock. Let me give you a non-refundable deposit. I'll come back and pick it up on Friday if I want to. If I don't, sell it to someone else, keep the money. Same thing. You can call it whatever you want. It is the right, not the obligation, to buy a stock at a certain price by a certain date. You need 4 items in order to make that happen. Number 1, a beginning date. Number 2, an ending date. Number 3, consideration. That's where the money comes in. And number 4, an agreement, or legal terms, meeting of the minds. Means you and I agree. I have a stock, I sell it to you at this price by this date. Okay, on 3:59 p.m. this Friday, you buy the stock or you don't. If you don't, you lose your money and I get to do it all over again next week. I'm okay with that because I get 1% every single week. And I really don't care whether you agree with me or not. I'm not here to appease you. Let me keep on going. Slew Charles, PLTR is going to go back to 188 to 100. It's inevitable. Okay, thank you. They still don't share the profits, which still means no thank you. It's not a cash flowing stock. It is a cash appreciation stock. That's not what I'm looking for. Because you put your money into PLTR, you sit there and you watch it, and you watch it, and you watch it, and you watch it, and then you wait to get out in order to spend that money. Yeah, that doesn't work for me. I'm retired. My money has to come in on a consistent basis. And I'm terribly sorry if I don't have enough money to satisfy your desires of doing what you want me to do. No, it don't work. No, thank you. Steve, yes, I know what it is. Thank you, Steve. Any opinions on MSTY? David, go take a look at the profitability of MSTY. How consistently profitable they are. Also, how old are they? They're 1.5 years old. Do you really want to invest your money into a company that's 1.5 years old? It's a serious question. Okay? Do they have enough historical performance to satisfy your desires? Well, for me, it's 2 decades, which is 20 years. So, no, for me. You like it, you do it. How do I feel about Delta Airlines? Same thing. Is it a profitable company? Are they consistent? Raj, I have no idea who ASMI is. Okay, Raj, we already looked at Coca-Cola. You're going to love the liberals. No, I'm not, Mikey G. Sandy, Target, love Target. ASST, thank you, Kerwin. Fubar, gotta like that one. Don't like Apple. Okay. His, Google, Microsoft, ATY. Okay, you guys, I'm going to cut out only because I got to be up at 4 in the morning, catch that flight, go to Vancouver. Vancouver! Purple Dave, how are you doing today? So that being said, you guys have a great day. Oh, seriously? Cambo, take a look at the profitability of the QQQI. Same thing. How consistently profitable are they? There's 10,571 companies. Why are you picking companies that are not profitable? Consistently profitable. Anyway, I'm done. So you guys over here, catch you tomorrow. We got a little bit of an issue with tomorrow, but we'll talk to you later. Have a great night, everyone. Okay, you guys over here, have a great night. Done. Okay, over here, done. Over here, you guys have a great night. We'll do this again tomorrow night. But tomorrow night, I'll be coming in from Canada. So we'll be broadcasting from Canada tomorrow night. And I don't know if I'm going to have the screen tomorrow night. But you guys, see you later. Come on. All right, that doesn't want to turn off.